It is a great pleasure to join you here, and I know that this particular panel stands between you and the lunch, so we'll hopefully try to connect it with this morning's session, which I understand was very engaging and exciting. We are all here to talk about infrastructure, and we all realize and recognize the importance of infrastructure. For some of us, it is a business, but at the same time, it is important for development. Poor infrastructure makes Africa unproductive. We all know that only 1% of global manufacturing is done in Africa, and largely it is because of the lack of infrastructure. I also wanted to link it to the job creation, because my institution is the private sector of the World Bank arm of the World Bank Group, and we focus on job creation a lot. And of course, job is a path on prosperity and also out of poverty and fragility, but infrastructure is critically needed for businesses and individuals and for those jobs to be created. And that is why for IFC, infrastructure is the core strategic priority in IFC strategy. And we believe that we are in a strong position to work with all of you to create opportunities for business and for development. I wanted to cover 2 points. I think David mentioned that IFC is shifting its strategy, so I would like to make you all aware of that. And we have worked with many of you already. And I want to say a bit about IFC's Infra Ventures. Many of you are familiar with Infra Ventures. It is a 150 million project development fund that we are now also reshaping, and we wanted to be more flexible, and we also wanted to work with some new de-risking tools that are becoming available and that I will talk about. I wanted to start with strategy. You are probably aware that the World Bank Group has set a very ambitious 2 goals to eradicate poverty and to boost shared prosperity by 2030. And this links to all the sustainable development goals by 2030, which, as you probably know, will need close to $4 trillion a year of investments, and half of that will have to come from the private sector. So we expect that that will make private sector investments grow 6 to 8% per year. IFC, as the private sector arm of the World Bank Group, has asked ourselves, how do we make this happen? What would have to happen for private sector to grow at that rate? And we came up with a strategy that will actually bring us much earlier into the countries, into the sectors, to open them up. We call it creating markets, but in essence it will be removing the constraints by working closely with other partners to make private sector investments happen. And I will summarize maybe 3 ways on how we are going to do that. The first one is really to work on creating markets and basically creating business enabling environment that will also make the changes the conducive for private sector investments and private sector growth. I already talked about constraints for which we actually need to partner with the World Bank and some other institutions to remove them in order to create opportunities for private sector investments in infrastructure. We also want to work on models that can be replicated. You probably talked already about platform approaches. We believe that that will be absolutely needed to take the investments to scale. And we also would like to work on supporting skills and capacity development, both in governments and with private sector clients. And once again, to repeat, this creating markets approach will require not to wait for projects to come to us to become available, but also to work hand in hand with sponsors and developers, go more upstream and earlier, much more than what we were doing in the past. I think the second pillar of this strategy is what we call private sector first. principle. We are now working very closely with the World Bank and other MDBs to make sure that whatever can be funded through private and commercial sources does not get funded through public sources, because public sources, as you know, are very scarce, and we believe that they should be left for some sectors where private sector will not come in. So whenever private sector solution is not possible, we would like to work on regulatory reforms and upstream project development to create, again, an opportunity for private sector to invest. And which will now link to my third point, and I know that you discussed it this morning. If indeed it is the private sector first principle, and there are still some issues that private that make private sector shy away from some of those investments, we want to use various de-risking tools to de-risk the financial risks and some other non-financial risks that the private sector is facing. That will allow us to actually maximize the use of ODA, the scarce ODA, so that $1 of ODA can be multiplied through mobilization that will come through the private sector if we are able to structure those projects in such a way that private sector will want to come in. I wanted to bring up actually a new tool that we have, and David already hinted it. This is something that we are very proud of, and it is the first time in the 60 years of history of the Fund for the Poorest Countries that we call IDA that we have been able to secure $2.5 billion to de-risk the private sector. This fund has normally been deployed as grants and concessional loans to the governments. In a great extent, this is happening in Africa. Most of those funds are deployed in Africa. It gets replenished every 3 years. And for the first time in the replenishment for the next 3 years, we got a window that we call private sector window of 2.5 billion. 500 million will be used by MIGA, our sister institution that provides political risk insurance, and 2 billion will be available to IFC to develop private sector projects that will be de-risked by using the private sector window. And I wanted to tell you more about the risk mitigation facility that I believe you would be most interested in. This window for IFC has 3 facilities. Risk mitigation facility is primarily dedicated to infrastructure projects. It will provide project-based guarantees without sovereign indemnity for large infrastructure projects, from power to telecom and broadband. It will allow us to have a liquidity backstop to mitigate the off-taker risk. And that is relevant, of course, in Africa, where off-takers can be dependent on public subsidies and have accumulated arrears. And it will also allow us to do a PRI, political risk cover, for IFC and potentially other development financial institutions to mitigate termination risk. I heard that you talked this morning about the EU external investment plan. We're working very close with the EU and EIB on how we will partner together on this set of tools. I also wanted to mention that in addition to risk mitigation facility, we have something that we call blended finance facility that will allow us to blend $600 million of IDA money with commercial investments by IFC and other partners. That is relevant to infrastructure, but also to some other sectors where we will be able to blend in Africa. And the third facility is the local currency facility, which will allow us to develop local currency solutions in countries where this is now not possible, either because of the weak local institutions or where we cannot also issue bonds. So this will be an additional instrument to what already other instruments allow us to do in terms of the local currency. So we are very excited by this $2 billion de-risking set of instruments. We hope that that will allow us to develop a pipeline that wasn't possible in the past, and that we will be able to open up some sectors and in some countries, not just for our own investments, but also for other partners' investments. And I wanted to say that because this is a blended finance type of instrument, we expect to mobilize around $8 billion of investments, around 2.5 billion of de-risking. This is lower than our typical mobilization rates, but because what we are trying to do with this is extremely difficult, we are kind of being moderate in our assessments. I also want to say something about Infra Ventures and the changes that we are making. We've used Infra Ventures to actually make markets before we even came up with a strategy of creating markets. And as you know, a single large deal in infrastructure can often make an entire market, create connectivity and move people out of poverty. Azura in Nigeria is one example that I wanted to mention. That was the first privately financed independent power producer in the country, and it unlocked doors, open doors to IPP process in Nigeria. It established a template for future IPPs and was transformational in so many ways. And in the solar market and elsewhere, developers and governments are using this as a starting point. We set up IFC Infra Ventures around 8 years ago to support private developers, such as yourselves, to move projects forward in this difficult space. And we have had challenges and delays, but we also had some successes. In Senegal, the $140 million, 96 megawatt Tobin Power, heavy fuel oil, high efficiency, combined cycle power plant is one of the projects that we were able to develop through InfraVenture support. In Kenya, the 320 million, 100 megawatt Kipeto wind power project that you may be familiar with as well. And there are now many more players than there were 8 years ago, which is a good news. But we still need more deals, and the only way to get them on the drawing board is to have a lot of talented people with a blank sheet of paper to start drawing and designing those plans. And at IFC Infra Ventures, we have learned a few lessons along the way. One is that we should work in as flexible manner as possible. We are examining different models of doing this. And we will try to branch out from our joint development agreement that has been our chief model so far. We will engage with governments more. We'll try to leverage the policy and sector reform work that the World Bank colleagues are working on, and work much more closely than in the past. This is what we did for the railway project, SETRAG in Gabon. This can include designing whole new models on how to generate not just individual projects, but also programs of projects. And we're also very proud of one of the platform type of approaches that we have successfully started deploying. You might have heard about scaling solar, which is a one-stop shop approach with competitive tendering process and standardized template documents for developments and governments. And this is the one where we work closely with the World Bank colleagues, with the transaction advisory team that has provided advice to the governments, and of course our investment and advisory teams to put the structures together. Different models can suit different circumstances, and IFC InfraVenture is just one tool in the upstream toolbox, and I hope that throughout today you will actually be talking about many, many more. I would like to reiterate that upstream project development is one of the key priorities for IFC in Africa, and this is why we are very happy to be partners with you in organizing this event and in sharing our experience with you. I also wanted to reiterate that we finally have the tools that can take some of these approaches to scale, and the new IDA 18 private sector window that I talked about, especially with risk mitigation facility, is a key breakthrough for us. In the next 3 years, we have an opportunity to make it happen and demonstrate that we can indeed leverage scarce public ODA for much greater mobilization of the private sector. And as mentioned already, we would be very, very happy to partner with others, because we alone are not sufficient to bring the trillions of dollars into the infrastructure sector in Africa, and we are already designing principles for blended finance with other MDBs, harmonizing the mobilization framework, and it's a great collaboration that's being developed so that we don't compete for the same projects, but we actually collectively work on expanding the set of projects that we can partner in co-financing. And I'm really confident that together we can create markets in infrastructure in Africa, create opportunities in Africa, and this is where it matters most. Thank you.
Well, when Nena says finally, she means finally, because those that have understood, maybe I'm thinking when Richard Frank set up the IFC, before it had its rating, this has been a real struggle for the IFC, the World Bank Group, and MEGA to work together in this kind of way. And it's absolutely transformational. We need that. Yes. So it's really exciting to see that you have that expanded tool.
Absolutely, and I wanted to say that this will be something that will be overseen by all the governments who trusted us, that we can actually bring the private sector in this space, so we have to report on it, and IFC alone cannot do it, so this is going to force that collaboration that will be unprecedented in the next 3 years.
These people, the project developers that are with us, that want to work with the new IFC, Infra Ventures, what would you tell them to do? How best to interface?
I would start from what your constraint is. What are you seeing on the ground? I also want to learn that from you, because one thing is to sit in Washington and convince our shareholders that private sector can actually do it, but you are the private sector and you see those constraints. So we also have to start asking different questions, and those will be the questions that you will help us address. Once we know what your constraints are, we believe that we have a set of tools, whether it's the policy sector reforms, pressure on the governments by the colleagues from the World Bank, or de-risking tools, or infra venture support, or any other advisory services that we can put in to help de-risk the sector, de-risk the project, and in a way de-risk the country. But I think I would like to see a much closer link with people on the ground who are facing those issues, now that we have convinced, as I said, others that we can bring solutions to Africa through the private sector.
So can Donald or someone give people contact info?
Sure.
Yeah.
And I also wanted to say, Omar, please raise your hand. We have IFC Regional Director for Africa here in the room with us. He actually works and oversees all of the business development, and he's the key relationship manager with all the countries in the region. From July 1, he will be the key relationship manager. So I would encourage you to engage with Umar, because he sits in Nairobi, and he will be connecting you and others with all the tools that we have.
That is terrific.
Doing business in Africa. You can't afford to be without Africa Investor.